They do not believe Bitcoin is on the cusp of a deep and prolonged cyclical drawdown, and they expect prices to potentially make new highs next year.
Welcome back to Bitcoin MENA in sunny Abu Dhabi. I'm here with David Sensel, Grahamstone here with David Sensel. We're going to give you the weekly news. Starting off with some bullish price predictions from two major analysts. So first up, JP Morgan analysts, David, are predicting Bitcoin to 170K in the next 6 to 12 months. So in their client note, which was published on Wednesday, the strategists suggested that Bitcoin could catch up to gold. Basically, they noted that earlier episodes of macro volatility pulled investors towards crypto as an alternative, and they expect similar behavior in coming months. So specifically, they wrote, quote, "Our volatility-adjusted Bitcoin comparison to gold metric continues to imply a theoretical Bitcoin price of close to 170K, suggesting significant upside for Bitcoin over the next 6 to 12 months.
Did they release this after the FUD they had last week about what was it, the MSCI strategy delisting, and so that was also a JP Morgan report, right?
Yeah,
and it triggered some of the FUD on Bitcoin, right?
So this is all part of the conspiracy theory. You dump it, you get your compadres in, right?
And then
you pump it,
right? Yeah. The Vanguard bros buy the fear,
right?
And then afterwards you say, new report, 170K coming up.
Soon. Okay, so David, I take it you're not buying this note?
It makes me roll my eyes a little bit. You see a lot of these analyst reports come out with price targets. But at least for some of them, like for example, Bitwise, shout out to Bitwise, there's none of this flip-flopping, right? Some doom one day and then the next day.
I mean, as you've noted many times, I think, what they tend to do is, when things are going well, they're predicting higher prices, and when things are going not so well, they're predicting lower prices.
Exactly. Yeah.
Anyway,
great
side note though, with what's happening here in the markets, right? The total market cap, the TBL of all stable coins, had briefly dropped there over the last month or two, but it's back up to all-time highs.
That's right.
So this would imply that there is, a decent amount of dry powder. People are sort of just waiting. The people haven't completely exited the crypto markets.
Yeah.
They're just waiting to get back in at some point, right?
So, and as we've said many times before, stablecoin inflows, I think, are one of the most reliable predictors of, I would say, either exhaustion, maybe within a bull run, but also when you start to see lots of redemptions outflows out of stables, those are people exiting crypto.
Completely.
Yeah.
Now, things have probably changed a bit here, though, with that whole dynamic, because in the past, that's what you would do is exit crypto. But now we have different players using stable coins. So they're not necessarily all just speculators. They're actually using stable coins now.
That's the fear, though. Because that means the signal is less clear.
Exactly.
From this point. All right, well, JP Morgan isn't the only analyst that's predicting the bull run isn't over. Grayscale also is bullish, I guess, now. The investment research team for Grayscale published a report on December 1st, and the report states that they do not believe Bitcoin is on the cusp of a deep and prolonged cyclical drawdown, and they expect prices to potentially make new highs next year. That doesn't seem like a very bold prediction, but again, quote, tactically, some indicators point to short-term bottom, while others are still mixed into year-end. Positive catalysts may include another rate cut from the Fed and bipartisan progress on crypto legislation. That would be the Clarity Act. The team argued that Bitcoin's pullbacks, historically frequent and often sharp, do not imply a multi-year bear market. They added, although the outlook is uncertain, we believe the 4-year cycle thesis will prove to be incorrect and that Bitcoin's price will potentially make new highs next year. The 4-year cycle is dead.
Grayscale saying the bull year, we both made the same mistake.
Yeah.
Grayscale saying the 4-year cycle is dead.
Yes.
This is one of the key questions that we want to be discussing during this conference.
That's right.
Grayscale siding on the side of 4-year cycle dead. All right. Let's move on from investment groups' predictions on the price of Bitcoin to what's happening in the regulatory landscape. So we've got pretty big evidence coming out over the last week here of continuing a show of the regulatory shift that's happened in the U.S. And this one comes as the CFTC has green-lighted spot Bitcoin trading. So the Commodity Futures Trading Commission, CFTC, announced that spot Bitcoin trading is now permitted on fully regulated United States exchanges. Bitnomial is going to be or I think already is, the first U.S. exchange cleared to offer regulatory approved spot cryptocurrency products.
Charles Schwab's got to be coming up, right? That was the big announcement last week. Anyway.
So what does this actually mean? I think that's the question. I'm confused by this because you're like, well, wait a minute. I thought people could already trade crypto in the United States. Like, what about Coinbase? But apparently what the difference here is that for the first time in history, traders will actually be able to effectively hold and trade real Bitcoin and access like on regulated exchanges, like the same like the way that they trade stocks.
Stocks and ETFs, yeah.
Yes. And access spot trading, perpetual swaps, futures, and options. And all of that inside a sort of a unified collateral and margin system. Now, according to some analysis from a guy on X who goes by the name of Matt Macro Minutes, he says this is the beginning of the end for paper Bitcoin in the United States. So he says that for more than a decade, Bitcoin has traded in two parallel financial worlds. Offshore exchanges.
Okay, like Binance.
Yes, offered high leverage and extremely efficient collateral reuse. Meanwhile, the Chicago Mercantile Exchange became the prominent, dominant, regulated venue in the United States.
Definitely.
But it only offered cash-settled Bitcoin products. Now, cash settlement meant institutions could take enormous positions without ever holding real BTC. Over time, this created a large layer of synthetic Bitcoin, he's saying, sitting on top of the actual supply. And price signals often reflected the behavior of these synthetic markets rather than the true spot demand. So he says that what this change does is it makes regulated United States markets competitive with offshore venues for capital efficiency. And over time, what that means is that the influence of synthetic markets declines and the influence of real Bitcoin markets grows, and price discovery will follow somehow. Honestly, I don't really understand the nuance of how this is different, but people are saying this is a significant change.
Very, very cool. And I mean, for me, for my mid-curving take on this, it would be just that once you have retail users be able to open up their Charles Schwab app, and right next to Robinhood or whatever stocks that they're buying, they can also just buy spot Bitcoin or trade spot Bitcoin. That's going to be huge. And the thing that I think that it's going to cause is Coinbase and other like crypto native exchanges are really going to have a lot of competition then.
Yeah. That's what I thought too. Like, being also squarely in the mid curve, but then I started reading this analysis, and maybe it's deeper with the paper Bitcoin. I don't know.
Yeah, I do know that there's like a lot of not weird, but like there's a lot of arbitrage that goes on for because the CME thing, right? Like people will buy Bitcoin and they'll basically do a basis trade on like something like Hype.
Yes.
Right. Hyperliquid, the exchange, and then they'll buy the opposite side on the CME.
Yeah.
Right. And so they can earn.
Right. And so according to this analysis from the guy I mentioned, that basis trade
will evaporate.
has shifted already because of this.
Ah, interesting.
So that's the first signal that something different is happening.
Yeah. All right. Well, let's step outside the U.S. We are not in the U.S. right now. We're in the UAE. And TradFi adoption outside the U.S. has been slower, but it might be ramping up. I actually just interviewed Ralph Gibran, and he and I talked exactly about this and how the U.S. has kind of led institutional adoption in 2025, but maybe in 2026 we'll see other areas, including the UAE, catch up. So a UA financial institution is rolling out a multi-asset investment product that includes a 5% allocation to Bitcoin, institutional adoption. Masharek Capital says the fund, which will be available to retail investors, will be composed of Bitcoin at 5%, gold at 5%, while equities and fixed income will account for the remainder. This kind of matches what Ralph Gibran was saying, that people, especially retail in the UAE, are very comfortable with gold, and Bitcoin kind of gets some transference from that. And so it feels safer and less suspicious.
Well, this development from Mashrek Capital, like an investment group here in the UAE, aligns with what JP Morgan's prediction was, right? Like they're saying that because gold has done so well, surely Bitcoin is also going to do so well. And here you have an example of an investment fund where they're offering the same allocation, same percentage of allocation as gold to Bitcoin as gold.
Yeah, it's a good sign. Very, very nice. So yeah, it shows that there's growing confidence in this region outside of the U.S. for Bitcoin. Brought to you by regulatory clarity and kind of a not antagonistic government.
Funny how that works.
Yeah, it's awesome. And obviously, they think that there's going to be investor interest in the region. So again, good signs for outside the U.S.
All right, let's move on to away from Bitcoin for a minute and look at the remittance space. So we have two interesting stories this week from the remittance giants, Western Union on the one hand and MoneyGram on the other. Both of these remittance giants in the last week have made announcements about how they're going to be using crypto rails for remittances. So Western Union is reportedly rolling out a stable card, quote stable card, which is aimed at helping people in high inflation economies protect the value of the remittances. It's part of a larger play that they're working on that includes their own forthcoming coin. So Western Union, I don't think you had that on your bingo card.
Jeez.
In 2017, launching a coin.
Unbelievable.
On the Solana blockchain, by the way. And that infrastructure is reportedly anchored to the US dollar payment token, USDPT.
Is that their own?
I think so, which is expected in 2026. And then MoneyGram also announced on December 4th, so just a few days ago, a strategic partnership with Fireblocks to enhance its global payment network through advanced stablecoin infrastructure. So again, remittance giants abandoning TradFi, moving to crypto rails. It's finally happening.
I would say forced to innovate, forced to change, forced to stop gouging.
Yeah, well,
I've made it clear.
Exactly. The business use case the business case is there.
Yeah.
It works.
All right. Well, let's end with prediction markets. Everyone knows prediction markets at this point, especially who's watching this. Pretty much everyone in the world will probably know them by 2026. I'm going to predict. I think 2026 will be prediction markets will be one of the biggest narratives next year. To wit, CNBC announced on December 4th a comprehensive partnership with Kalshi to integrate prediction market data across its television, digital, and subscription platforms. The collaboration, which is set to launch in 2026, will introduce a Kalshi ticker to an on-air programming, including popular shows like Squawk Box and Fast Money. This industry-first approach aims to provide viewers with real-time market-driven insights into economic and especially political and financial events.
All right. So Kalshi integrating with CNBC and CNN, two announcements both this week. Basically the same announcement in both cases. Meanwhile, there's a story this week. Authorities in Connecticut, one of the states up there near Canada, issued a cease and desist order to Robinhood, Crypto.com, and Kalshi, saying they are offering unlicensed sports wagering. So on the one hand, you have Kalshi making deals with CNBC and CNN for prediction markets. On the other hand, you have errant regulators in far-flung states saying, "Wait a minute, that's sports betting. That's unregulated betting."
But it is sports betting. I mean, for sure, sports
Exactly.
betting. There was a lot of commentary on X over the weekend about this, and I think one post that really caught my eye was like 80% of Kalshi's volume is on sports markets. Right.
Yeah, I mean, David, we've said this from the start. As soon as, when you're very early with prediction markets, I mean, and as soon as I caught on to them, thanks to you, I was like, well, sports betting.
Yeah.
I mean,
yeah, exactly. but so Kalshi in particular, it's slightly different than Polymarket, I think. But Kalshi, again, most of their money is being made on sports betting. But because it's like a prediction market and they use slightly different legal language, they don't have to get any of the licenses and all this kind of stuff. So
obviously a loophole that, quite frankly, I mean, I don't know. I'm not going to say we need more governance, but gambling is, I don't know, whatever.
All right. Gambling is, I don't know, whatever.
I don't know, man.
That's great.
Yeah.
Kind of feel the same, though.
Yeah. All right. That's it for today, for the week. We went through the news. Next up, we've got Greg Davis, who is the director of MENA for BTC Inc. Stay tuned for that. We'll be right back.